Welcome to Money Talks with Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, U.S. stocks swing between gains and losses on weaker consumer confidence data. Markets brace for any finality on the April 2 tariff threats. The Bangko Sentral ng Pilipinas expected to resume rate cutting this year, says S&P Global, far deeper than the Fed. We speak with one of the authors of this report, Vishrut Rana, live from Singapore. And finding great deals in times of crises. We speak with e-commerce whiz and now newly minted book author Steve C. on being debt-free. Confidence in the U.S. this March is the lowest in 4 years, while future expectations hit a 12-year low, signaling the risk of a recession. The conference board on Tuesday said Americans are worried about the uncertainty surrounding President Donald Trump's trade policies. Consumer confidence index stands at 92.9, falling by 7 points. The present situation index, or consumers' assessment of business and labor market conditions, decreases by 3 points, while expectations index, or consumers' short-term outlook for the economy, falls by nearly 10 points, way below the threshold of 80 that usually signals a recession ahead. Economists pan Trump's deferring pronouncements on tariffs, saying they only sow confusion for businesses. Consumer confidence measured by the University of Michigan is already at a 4-year low. The Federal Reserve has also downgraded its projection for economic growth while dialing up its inflation forecast. Chinese tech stocks nearing correction, with the chairman of online retailer Alibaba sparking fears about the future of artificial intelligence. The Hang Seng Tech Index fell on Tuesday by nearly 4%. The index has declined by 9.6% in the past 5 sessions, just below the 10% threshold typically considered to mean it has entered correction territory. Stocks declined after Alibaba chairman Joe Tsai admitted he had seen signs of a bubble forming in data center construction, indicating that AI demand does not match investors' expectations. And U.S. markets have closed slightly higher this Tuesday. Investors are still expressing optimism about the outcome of Trump's tariffs. The Nasdaq leading the indexes, gaining by 0.5%. S&P 500 rising by 0.2%, and the Dow climbed by less than 0.1%. As for the benchmark 10-year Treasury yields, they have slipped to 4.307%. And gold prices snapped a 2-session losing streak to rise by 0.4% at $3,023.70 per troy ounce. Let's take a look at U.S. futures, pointing to a slightly higher open when the markets begin trading this Wednesday. Later tonight, Manila time, the Dow is up by less than 0.1%, S&P 500 rising by over 0.1%, and the Nasdaq climbs 0.2%. Tracking those gains in Wall Street, Asian markets opening higher this Wednesday. Looking at those up arrows there, with Australia's ASX 200 rising 0.7%, South Korea's Kospi up by 0.3%, and Japan's Nikkei 225 climbing by 0.6% as well. The Bangko Sentral ng Pilipinas may cut interest rates in April as inflation stays within target and risks remain moderate. Speaking to Bloomberg TV in Hong Kong, Bangko Sentral Governor Eli Remolona says the central bank is in an easing cycle and expects a 25 basis point cut next month. The Bangko Sentral had rates at 5.75% in February after 3 straight cuts in 2024. The Bangko Sentral is also managing liquidity. Last month, it lowered the reserve requirement ratio by 200 basis points for banks. Remolona says the 5% triple R for big banks is still high, but further cuts will depend on the Monetary Board. Now, S&P sees the Philippines benchmark rate coming down to 4.75% this year, implying a total of 100 basis points worth of rate cuts. S&P Global last November affirmed its BBB+ long-term credit rating for the Philippines, but raised its outlook to positive from stable. Well, with us now for more from Singapore is S&P Global Ratings Asia Pacific economist Vishrut Rana. So good to see you, Vishrut. Thank you so much for joining us.
Thanks, Cathy.
So I was reading your report, and saw that you're expecting the Fed to cut the policy rate by 25 basis points this year, and that's it. Now, the Fed funds futures are pricing in more than 25 Fed rate cuts for the year. So why the more conservative view, Vishu?
Right. No, that's an excellent question. And of course, the Fed drives a lot of the Asia-Pacific central bank decision-making as well in terms of influencing the path of capital flows. So an important variable that we watch out for. In the United States, we continue to see relatively elevated inflation pressures, especially underlying inflation. In addition, the uncertainty caused by trade policy may lead to higher inflation, in our opinion, also. And as a result, we are expecting the Fed to be cautious in terms of easing interest rates. We continue to see relatively resilient activity in the US economy, which means that from a growth front, the Fed isn't currently under pressure to be easing rates as much as the market currently expects, and hence our projection for just the one rate cut. For the Philippines, we see the policy rate ending up at 5.25% towards the end of this year and 4.5% next year. So still a little bit more aggressive than the Fed, but not highly increased relative to the U.S. interest rates also.
But it is a little bit aggressive, as you say yourself, Vishnu. Just mirror that with the Bangko Sentral policy rate cut expectations, a total of 100 basis points for the full year. That's a lot bigger even than the Bangko Sentral's own signaling. So how would the Bangko Sentral be convinced to cut more than that?
So we don't project 100 basis points of cuts this year. We project 50 basis points. So we expect to end the year at 5.25%. A number of factors are driving the BSP's decision-making, I think, in the current environment. For the Philippines, what we see is that in the later half of 2024, we saw some softening of the domestic activity, particularly domestic demand. We have started to see some of that start to come back online towards the start of this year. We're expecting economic activity to improve in 2025, so we project around 6% growth this year, higher than the slightly north of 5% that we had last year in 2024. In that environment, inflation still remains very much under control. So the BSP has flexibility to ease interest rates. On the other hand, the capital flow environment is still quite uncertain. There's still capital outflow pressures. The currency has been broadly stable, but the BSP will not want to move too quickly to avoid the risk of triggering capital outflows, particularly while the US Fed and interest rates remain relatively elevated.
All right, so you're saying that Trump's trade policy will squeeze or strain, but not choke growth in the Asia-Pacific. So where does the Philippines stand then within the ASEAN when it comes to the depth and the breadth of the impact of Trump's tariff policy?
Yeah, that's an important consideration for us in APAC this year. Of course, the outcome of trade policy and how economies are relatively positioned. A number of APAC economies are very trade-oriented. They depend on external demand for driving their growth. The Philippines falls somewhere in the middle in that group, slightly more towards the domestic orientation in terms of its economy. Compared to peers, for example, Malaysia, Thailand, these would be more externally oriented economies. Vietnam is an outlier, very externally oriented economy, relies very much on US demand. The Philippines, less so. Indonesia, even less. So these two economies have relatively lower external reliance and as a result, a little bit more sheltered from trade developments. Two other quick points that I want to mention for the Philippines. One is that there's greater reliance on services trade, right? Things like business process outsourcing and tourism, etc. These service exports are sheltered from trade measures, which is a benefit. And also, the Philippines does not run a large trade surplus with the US and may not be on the radar for US trade policy.
All right, we'll keep an eye on those shelters in tourism as well as services. Vishrut Rana of S&P Global Ratings in Singapore, thank you so much for joining us.
Thanks, Cathy.
And you're watching Money Talks on One News. Coming up, find out how technology is used in vegetable farming. And the country's top technology leaders and innovators come together for Tech Week in Cebu. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Ukraine and Russia agree to a pause in fighting in the Black Sea and hash out the details for halting strikes at energy facilities. It will be a significant step toward a ceasefire 3 years after Russia invaded Ukraine. Ukraine President Volodymyr Zelensky says it is too early to know if the deal will work. Last week, after both countries announced that they would stop attacking energy facilities, they quickly accused each other of continuing strikes. The Bangko Sentral ng Pilipinas urges financial institutions to strengthen surveillance against vote buying and selling ahead of the May 2025 elections. In a memorandum, the Bangko Sentral instructs banks and e-wallet providers to monitor suspicious transactions and prevent the misuse of digital platforms for electoral fraud. This aligns with the Commission on Elections' push for stricter anti-vote buying measures. The Bangko Sentral is working with COMELEC and the Philippine National Police to enforce these regulations. Fresh, sustainable, and locally grown, the country's largest greenhouse facility is using advanced technology to transform vegetable farming. Mobile journalist Denise Valdesancho has this report.
Only a few hours away from the metro is the country's largest greenhouse facility, with its promise to provide a safer, more nutritious, and more sustainable fresh vegetables to every Filipino. Now in its first phase of 3.5 hectares worth of greenhouses, the Metro Pacific Fresh Farms aims to address key challenges in the country's agricultural sector, including supply instability and the limited availability of good quality vegetables. Metro Pacific Investments Corporation Chairman, President, and CEO Manny V. Pangilinan is among those who attended the ceremonial first harvest of the greenhouse. Located in San Rafael, Bulacan, these facilities are expected to produce around 60,000 lettuce heads each month through their brand More Veggies Place. These facilities boast state-of-the-art technology, including the nutrient film technique, or the NFT, for the leafy greens alone.
The lettuce varieties grow in a medium that is no soil. It's all water. So just the water just passes through the roots. When they pick up the lettuce, you will see the roots are all white. Kasi malinis siya talaga. Because if it's in the soil, there's a lot of pathogens and there's a lot of microorganisms. Pero ang importante sa NFT is it delivers the right nutrients at the right quantities at the right time to each and every single lettuce head.
More so, this technology can achieve 5 times the yield of traditional farming, despite using 90% less water and land. Aside from supermarkets, consumers may expect the brand to be sold in restaurants, hotels, and food processors. Cost-wise, consumers may expect competitive pricing in comparison to the traditional salt goods.
We will give competitive value, knowing that again, when you talk about traditional vegetables, we're talking about 30% wastage when it comes to Metro Manila, and you've already seen from today a stark difference between the quality of hydroponic and drip irrigation NFT vegetables versus what is done by traditional farming. So they'll get more value for the peso that they pay. So it's very competitive.
Other vegetable types such as cucumber, capsicum, tomato, and sweet Palermo pepper will soon be available. As for their expansion,
See, we've seen the benefits in terms of production scale and also the quality. And if we are true to our purpose of really democratizing this and really giving this to the Filipino consumer, if we can expand to as many provinces as we can at as soon as possible time, then we will do so.
mobile journalist Denise Valdesancho. We are One News.
The future of technology takes the spotlight in Cebu as PLDT Tech Week brings together innovators and industry leaders. Here's One News Cebu correspondent Dale Israel with the report.
Tech Week opens in Cebu to discuss the future of connectivity and the use of AI technology for companies, startups, and the academe, and how it can improve the quality of work in their respective environments. It is the first time for the Tech Week to be held in Cebu, bringing together the country's top technology leaders and game-changing innovations in a conference attended by 1,300 people. During the breakout sessions, there were talks on cloud computing, connectivity, startup innovations, and discussions on an AI-powered world.
Tech Week, the objective is really to bring forth the new technology that is enabling majority of the enterprises, not just in the Philippines, but globally. So we try to bring this to the regions, whether it's in Mindanao or Visayas, because we're trying to be at the forefront of technology that can continue to enable the enterprises to grow further. And we have these solutions and services. What we try to do is basically explain this to them not to get overwhelmed, because really it's all about the enterprise leaders, right? It's all really the taking the step forward and adapting to technology. And our role is to handhold them all the way. Kailangan talaga magtulungan. It's a partnership as we move forward with new technology to continue to help them grow.
Speakers in the Tech Week include officials from Vitro Incorporated, Cisco, Alibaba Cloud PH, and other startup partners willing to engage with local businesses in Cebu. PLDT and Smart said that it has invested at least 60 billion pesos to improve infrastructure in Cebu province. These include putting up of more 5G cell sites, fiber lines, data centers, among others. They said that Cebu already has adequate technology infrastructure, but they are anticipating that these may soon not be enough as companies expand and users become more adapted to a technology-driven lifestyle. EPLDT and Vitro Incorporated say the 2 data centers in Cebu are already 80% full, with clients belonging to local businesses and SMEs, so another one may be needed in the coming years. Organizers of the Tech Week are looking into a future where homes and businesses are automated with AI technology, including cars that are driven with automation. The expansion of this infrastructure will play an important role in that given future. Dale G. Israel, One News, Cebu.
Checking on how the Philippine markets are performing midweek. PSEI opening this Wednesday higher by over 2 3/10% at 6,162. The stock market fell Tuesday by over 0.5%. Taking a look at the Philippine peso, opens today Wednesday slightly stronger at 57.58 to the dollar, closing yesterday weaker at 57.6 against the greenback. And with us now for more is Juanes Paredo, the Chief Technical Analyst at Cole Financial Group. So good to see you, Juanes. Thank you so much for joining us.
No, thank you for inviting me.
So when are we seeing that reversal in the charts? What are the charts showing us?
I think we'll take it a step at a time. This is a good time to actually accumulate the market because it's quite attractive. We've been stuck in a very big range for quite a number of years now, and we're at the bottom of that range. So
how big is that range? Maybe we could show it in the chart.
Yeah, sure.
Because
that's about a range between 5,800 and 7,500.
Okay, so
right?
what
so
does
we're
that say
about
then?
6,100 now.
Right, but we went down to 5,700 back in December 19th.
Yeah.
So that's a little bit of a reflection of what happened over the last maybe 3-4 months.
Yes.
But it's been repetitive, as you're saying, as what you were seeing in the chart here now.
And so I guess people should look at this as an opportunity because it's very seldom that you stand here for a very long time. And now that the market is here, people should look at the potential buyback into this area. Also, you can even look at the fundamentals, which also into favor because we're also at historic lows in the PE band, about only 10 times PE. And then companies are issuing a lot of dividends now that are quite compelling. And unlike before, I mean, you're seeing dividend yields over 4%, quite a number of companies at the same time. Some even have double digits. And if prices stay low or even nudge lower, that only means that your dividend yield will even become better. So I think people should really be looking at the opportunity to accumulate now.
So how much money had been had? I mean, if we're looking at this wide band for many, many years now, people making money in and out within that band?
Yes, the traders do that. A lot of people, though, hold through and through. So they've actually just seen a seesaw within that range. So I guess that would split the performance. Some would make money, some would probably go into a negative when it's in the low side. But they just stick things through. It's the traders who try to be able to make that more compelling by buying in the low and selling closer to the high range.
What about the bond market? The 10-year yield has been of particular interest since the start of the year.
Yeah.
I've seen that rise in terms of yield to about 6.1%. How is that doing right now? Is it in a static position, and are people getting into it as a sort of a hedge if they didn't want to play stocks?
Well, they're trying to gauge to see how fast interest rates will go down because as rates come down, the bond market rises. Yields will go down in that respect. So what's happening right now is they seem to be managing whether they're going to pull rates down very quickly because there's a threat of inflation. And because of that, bond prices have been relatively stable, if not just pulling back a little bit, allowing yields to actually climb back. And so the perspective there is telling me that they're being quite wary. And I think they should look, though, that the BSP has been very bullish in their approach because they've done an RRR cut, which is coming up, I think, in 2 days' time, reducing your reserve requirement from 7% to 5%. And then I think it was yesterday I heard him say that there's a possibility that he might even cut rates on April, maybe a 25 basis point cut. So these are all quite bullish themes that people should be concerned about.
So 30 seconds. One is stay fully invested or keep some in cash.
I think you can probably stay majority invested and just have a little cash just in case market dips a little more because that'll give you an opportunity to buy at a very nice price.
Just in case. That's
just
a
in
caveat
case.
there.
Yeah,
Thank
yeah.
you so much.
Okay,
Juanes, really appreciate it.
Thank you. Thank you.
Juanes Paredo of Call Financial Group. And coming right up, catch our conversation with Steve C. on being debt-free. Money Talks. We'll be right back. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. The entrepreneur who knew the future of e-commerce before it came to be also has a great deal to share about losing big before making it back and more. He is now a newly minted author of a book aptly titled From Great Debt to great deals. Well, with us now for more, fresh from his book launch, the founder and CEO of Great Deals E-Commerce Corp, Steve C. Congratulations, Steve, and welcome back to the program.
Thank you, Cathy. It's really a pleasure to be invited again to your Money Talks.
I know, and it's the first time. The first one was Thought Leaders. We were
Yes.
looking back when that was. That was in November. And I know that you didn't make any mention of a book. So I'm wondering now whether you started it after the conversation and had a holiday writing spree, or you started that well way back.
Well, I started 10 months ago, before the book launch. So it was really a hard, it's so hard to make a book.
But you had a great story to tell. Why was it hard to write the book?
To put the words into writing, I think it's quite a different experience as an author. To have your thoughts into words. And
Was it painful? I mean, I know you talked about your multi-million peso loss.
yes.
That really changed your life. So that must have been the most difficult part of writing the book.
Sometimes the things that we are ashamed of what we want to share, because of course being in debt is not something that you're proud of, is sometimes God uses these opportunities, these circumstances in our life to be the platform for people to be encouraged and to be hopeful that everybody goes through a desert experience and they have a promised land to look forward to.
Right, so what was it like at the book launch then? I mean, when people talked to you, what were the insights that you had? I mean, it looked really colorful at the book launch.
So it's, I was quite having excitement and a little bit of nervousness, definitely. But I'm happy because for me, it's being part of having a new platform to be able to share. I look at business as an infinite game. Typically when we play basketball, there's a fourth period you stop. But in business, it's an infinite game that you keep on playing. So I wrote a book that's hopefully being timeless also, that we're here not just to win, but to be able to sustain and contribute to our generation. And hopefully this book will exceed my generation and for generations to come.
And it looks to be the case because I see that you're now on the speaking circuit. Starting in April, you're going to be speaking to a huge audience about the book and your experiences at the SMX.
Yeah.
I mean, was that expected at all?
No, that was a blessing in disguise that I was invited to speak and said, okay, I'll talk about the book.
Very well timely, because your daughter and your 4 daughters, in fact, and your wife, very much involved. She had a post here, really got my attention. She said, following Steve C., not jobs. How is she doing in her own business? As I know that you've really let her go and just let her be who she wants to be.
As I've shared in the book also, I told my daughters, you need to experience struggle, because struggle, it's so hard at that time, but it develops your character. And I just like to share in this book also, there's, in terms of resiliency, in terms of grit and hustle, you'll be able to, I've been sharing it, that it's part of our journey, that when we rejoice in our suffering, it produces perseverance. Perseverance produces character, and character produces hope.
As it should be, resilience and grit. Well, thank you so much for joining us and coming back
Thank you,
here on that
Cathy.
book.
Yes.
All the best. Steve C. of Great Deals joining us here. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.